Welcome to Monday's edition of Tech Stocks Daily, where we sift through the NASDAQ busier than your weekend inbox. Today, we delve into MongoDB's bumpy ride facing 2 class action lawsuits, leading to volatile stock behavior. Then, wheels up for PDD, tackling revenue lows and high-stakes legal battles over alleged malware and forced labor. Finally, we'll lift off with AppLovin's, which has skyrocketed 126.3% YTD. Stick around for our stock pick of the day. Should you buy, hold, or sell? Stay tuned, it's going to be enlightening. All right, tech-savvy folks, hold on to your databases because today's tech news is all about MongoDB, and it's quite the roller coaster. So let's dive right in. MongoDB, the popular document database software company blatantly making waves, is currently facing some heavy scrutiny and legal challenges. Not 1 but 2 class action lawsuits were announced today, and let's just say things are far from smooth. First up, you have Berman filing a securities class action lawsuit against MongoDB, Inc. They're urging investors who experienced massive losses to step forward. Why? Because MongoDB's ship has hit some rough waters financially speaking. Imagine thinking you're on the Titanic heading to New York and suddenly discovering the iceberg right after the champagne pops. Here's the rundown. MongoDB initially seemed optimistic about FY 2025 revenue projections due to restructuring their sales incentives and reducing pressure on upfront customer commitments. However, in March, they did a complete 180 and lowered their full-year guidance. The officials pointed fingers at their revised Salesforce compensation model, which apparently sent upfront customer commitments crashing faster than we could say no sequel. The result? Revenue from those lucrative multi-year licensing deals also took a nosedive. Investors weren't exactly thrilled, and MongoDB's stock price reflected that immediate disappointment. Fast forward to May, and MongoDB again downsized their FY 2025 outlook. This time around, the lamentations were about macroeconomic factors impacting the adoption of their MongoDB Atlas product. Combined with the previous restructuring shakeup, this took another chunk out of their stock valuation, estimated to have shrunk stakeholder value by an eye-watering $7.5 billion. Investors weren't having it and are now going all Phoenix Wright Ace Attorney on MongoDB. The folks at Berman are looking into claims that the company's top brass possibly downplayed recognized risks stemming from their sales incentive makeover and global economic uncertainties. The main beef here is that investors claimed MongoDB's executives hooked them up with rose-colored glasses and a dangerously optimistic revenue forecast, knowing things might not be so rosy. Meanwhile, another legal player has entered the chat. Bernstein Liebhardt LLP also took this opportunity to throw their hat in the litigation ring. Reminding investors about the lawsuit's deadline, they further emphasize alleged false reassurances concerning revenue outlooks and growth expectations. This lawsuit also covers purchases made within the familiar but evidently turbulent August 31st, 2023 to May 30th, 2024 timeframe. The key dates here are critical for anyone considering action. Both lawsuits allow representation on a contingency fee basis, meaning shareholders will pay no out-of-pocket fees or expenses. Phew. Now, looking ahead, MongoDB's Q2 earnings are also under the microscope. Wall Street estimates that's 48.4% down year-over-year to 48 earnings per share. Revenue projections show a silver lining, with a 9.2% increase year-on-year to $462.92 million. Interestingly, analysts predict notable growth for MongoDB Atlas subscriptions, projecting them to reach $393 million, a notable 23.8% year-over-year increase. Yet, paradoxically, revenue services and other subscription areas are expected to reduce. That's the MongoDB status report, an epic tale of investors versus management, filled with thrilling ups and stormy downs. Keep your eyes on this saga, it seems like it's far from its final chapter. Stay tuned for more updates and keep diving deep into all things tech. Buckle up, tech fans. Today, we've got some sizzling news about PDD Holdings Inc. that's got everyone talking. First off, PDD wasn't just in the news once but multiple times today. Let's start with their less-than-stellar financial results, which have made waves across the market. PDD reported 86% year-on-year revenue growth for Q2 2024, hitting $13.36 billion. Now you're probably thinking, wow, that's fantastic. But hold your applause. Analysts expected $14.02 billion, so they fell short. Despite beating the earnings per share expectations, the revenue miss didn't sit well with investors. This didn't just affect PDD. It also caused collateral damage to other companies in the digital space, including Bilibili, which saw its shares dip by over 4.59%. Now let's talk about the legal drama. Faruqi & Faruqi, a heavy hitter in securities law, has launched an investigation into PDD. Why? Because some investors took a massive hit, $100,000 or more, and the law firm is sniffing out whether PDD might have engaged in some not-so-ethical practices. They're urging affected investors to step forward. You see, the allegations are pretty serious. According to the class action lawsuit, PDD's apps allegedly contained malware capable of extracting user data, including private messages, without anyone's consent. If that doesn't already set off alarm bells, PDD's platform has been accused of selling products made by forced labor. These controversies led Arkansas Attorney General Tim Griffin to sue PDD's Temu online marketplace for violating the Arkansas Personal Information Protection Act. Griffin didn't mince words, calling Temu functionally malware and spyware. Robbins, Geller, Rudman and Dowd LLP, another significant player in securities litigation, also jumped into the fray. They filed a class action lawsuit against PDD, alleging securities fraud and urging investors with big losses to become lead plaintiffs by October 15, 2024. The lawsuit claims that statements made by PDD during the class period weren't exactly kosher. They're essentially calling PDD out for misleading investors on multiple fronts, including their shady app behavior and forced labor accusations. And that's not all. Media outlets like Reuters, Bloomberg, and CNN have piled on, detailing how Google suspended Pinduoduo's app due to security concerns, and cybersecurity researchers have extensively documented the alleged malpractices. These troubling revelations have sent the stock price on a roller coaster, dropping significantly after each report. So what does this mean for you, dear investor? If you've dabbled in PDD stocks and felt the burn, these law firms are clamoring to represent you. And if you're just a bystander, grab the popcorn because this tech legal drama is far from over. Keep your eyes peeled for more updates as this multifaceted saga continues to unfold, because in the world of tech, there's always more than meets the eye. Hey tech enthusiasts, buckle up because today we're diving deep into AppLovin's astronomical rise this year. Yeah, you heard that right. AppLovin, the mobile technology platform for gaming and advertising, has seen its stock soar by a jaw-dropping 126.3% year-to-date. But wait, there's more. This epic climb didn't just outshine the 21.3% rally of its industry or the 18.1% growth of the Zacks S&P 500 composite. It left them in the dust. And how's it stacking up against its tech titans? Alphabet managed an 18.6% bump, and Meta Platforms shot up by 49.2%. So AppLovin's hitting these numbers and looking cooler than ever at 92, just a stone's throw from its 52-week high of 92.5. If that's not a mic drop moment, I don't know what is. Despite its stellar rise, AppLovin's growth kind of hit the pause button mid-year, but swiftly recovered, gaining 10% over the last 3 months and 16% in the last month. Driving this rocket is the shiny new Axon 2.0 tech, a turbocharged expansion in gaming studios and killer initiatives boosting market growth. These strategic moves aren't just for show. They boosted the company's revenue by a whopping 76% year over year and adjusted EBITDA by 41%. For Q2 2024, drumroll, a 44% bump in revenue and a massive 286% surge in net income. Of course, life isn't all confetti and champagne. There are risks, potential slowdowns in gaming ads and unknown variables from their non-gaming ventures. But AppLovin is striding ahead thanks to tech advancements and strategic maneuvers, setting the stage for continued growth. Now let's talk numbers. The Zacks consensus estimate for AppLovin's 2024 earnings has zoomed 255.1% from last year to $3.48. Analysts are showing the love too, 6 estimates bumped up with none going down. For 2025, earnings are expected to rise another 22%, with sales poised to increase 35.1% in 2024 and 11.1% the following year. It's like the analysts are saying, "Who's your daddy?" And AppLovin is all like, "Yup, the stock's valuation is another juicy bit." It's currently trading at 22.9x forward earnings, which is much cooler than the industry's 35.29x. Even the trailing 12-month EV to EBITDA figure of 12.4x is hot on the industry's heels at 11.86x, indicating there's still plenty of fuel in this rocket. So what's the bottom line? With strong financial results and promising growth prospects, AppLovin seems like a treasure trove waiting to be, well, unloaded onto your portfolio. So, investors hunting for the next big thing, right here, folks. But hey, enough from me. What do you think? Is AppLovin a must-buy, or is this just a sugar high? Drop your thoughts in the comments below. I'm dying to hear what you have to say. Have an awesome day, stay techie, and keep those opinions flowing. All right, tech fam, let's zero in on one of the stocks we covered today, MongoDB. This one's caught my attention with its mixed bag of legal conflicts and market performance. Let's break down whether you should hit that buy button, hold tight, or run for the hills and sell. Given all the juicy news, drumroll please, I'm leaning towards hold for MongoDB right now. Here's why. The case for holding MongoDB. 1. Legal headwinds. We've got not one, but 2 class action lawsuits on MongoDB's plate. Hagens Berman and Bernstein Liebhard LLP are both coming in hot, accusing MongoDB of potentially downplaying risks and misleading investors. Yikes. These legal battles could take a while to resolve and might spook some investors in the short term, causing volatility. So selling now might lock in unnecessary losses, but jumping to buy more or sell can be risky without seeing how this plays out. Number 2, financial roller coaster. MongoDB saw ups and downs with its FY 2025 revenue guidance originally being optimistic and then revised twice, both trending downward. What a twist. Analysts expected a solid performance anchored on MongoDB Atlas subscriptions, and while those have been slightly reassuring, the macroeconomic issues aren't something to ignore. Investors crave stability, and this hasn't been MongoDB's forte lately. Number 3, Q2 earnings watch. Analysts expect a notable year-over-year dip in EPS, but are also projecting a 9.2% increase in revenue. MongoDB still has some silver linings here, with promising Atlas growth. This mixed signal means it's wise to wait and see the actual numbers before making any drastic decisions. Given this circus of events, potentially significant upside if MongoDB emerges resilient, coupled with notable risks from ongoing lawsuits, our safest bet is to hold on. Keep an eagle eye on those lawsuits and upcoming earnings. The potential for a rebound is there, but so is the risk of further declines. Caveat for my savvy listeners, remember, this is just one vlogger's take, and everyone's financial situation is unique. Always do your own research and consider consulting a financial advisor before making any big moves. The tech market can be as unpredictable as my Wi-Fi signal during a live stream. So, there we have it. Hold on to MongoDB for now, and stay tuned for how this thriller unfolds. What do you think about MongoDB's situation? Let's talk it out in the comments. Let's tie it all together, tech enthusiasts. Today was a whirlwind on the NASDAQ, especially for MongoDB grappling with lawsuits, PDD facing a PR storm alongside missed revenue targets, and AppLovin absolutely smashing it with a whopping 126.3% YTD stock surge. The tech world never ceases to amaze, right? If you enjoyed today's tech updates, smash that like button, subscribe for more daily tech news, and don't forget to share the love. Set your reminders because we've got another tech-packed video coming your way tomorrow. Until then, stay techie.